Welcome to YouTube. I'm going to give you an update on what's going on with the stock market, okay, the economy, and here's what's going on right now. Here's the stock market as it lays right now. It's in a consolidation. They did try to break it out a couple times and failed, like this, okay, and what is going on right now is that they're holding up the market. The market's being held up, and how they're holding it up is the bond market. They made sure they bought enough bonds, the Fed, the Treasury, bought enough bonds to make sure that the yields drop down to a terrible 1.5%. That drives all the big boys, the big countries who buy our debt, our treasuries, out of the treasuries and into the stock market. And that's what's happening. So you got China, you got Japan, you got Germany, and the Saudis, they don't want 1.5% when they get into the market, and they can pick up a 2.5% yield on the S&P, okay, dividends. So that's what they're doing. So they're playing the game. They take the printing machine right here, and they print money so that they go and buy, they print money so the banks can go and buy all the 10-year treasuries that drive the yields down like that, okay, and that forces them in. That's what's going on. So now what are we going to do to break this out? Well, QE. But here's the thing with quantitative easing. Quantitative easing doesn't do anything for the economy. All it does is make 5 percentile very rich, a small segment of our population. Quantitative easing, you use quantitative easing when everything else fails. They'll give you the big story that quantitative easing, they're going to buy treasuries, drop the yield down, and that's going to force everybody into the stock market to push stocks up. And because they're going to push stocks up, that's what they did back here. See, QE was from here to here. That's what they did here. They claimed that when they pushed this market up under QE1, QE2, the twist, and QE3, that got all these CEOs very happy, and CEOs went in and started to buy a lot of, they started to do spending, okay, business spending, capital spending on equipment and all that sort of thing, tools and machinery, which is what drives our economy. It drives our GDP, economic growth, and it creates jobs. That's all a lie. None of that happened. Okay, bold-faced lie. Okay, it was for one reason, get the 5 percentile to make a lot of money, okay? And that's what's going on. Then when they stopped it, they started all the stock buybacks right in here, and they rigged the stock market with stock buybacks. They're still doing stock buybacks, not as much as they're doing back here. But between the stock buybacks and between driving the yield down this low to get the Saudis, the Chinese, the Japanese out of the bond market, the stock market, everything is just going sideways, okay? So everything's stagnant. We need a catalyst. So they're talking about doing another QE, and I think another QE will come, and they'll drive the market right up like this, going right back into the fall to the election, because they're trying to get Hillary elected. And plus, remember, it's the banksters who control QE, decide when it's going to happen or not. And it's the banksters who've been paying Hillary $250,000 a pop to get her elected, right? They mask it with speeches, and they are in bed with her. What a terrible thought, but they are, okay? And so they're going to decide when to do QE, and that's when we can make a lot of money. Then eventually what's going to happen is, with the stock market, this was the dot-com market stopped, tech market stopped, housing market stopped, and it collapsed. This is the tech market, and it collapsed. We're doing the same thing right now. We should be collapsing right here, same thing. Because what happens before every collapse, you get where products start to lose value because people aren't buying anymore. So you get depreciation. So everything goes down in price. And when everything goes down in price, people start getting business to lay people off, and that's how you get the crash. Same thing happens here. You get the big move up, then all of a sudden everybody stopped buying houses. Remember the housing market? Everybody stopped buying houses. People got laid off. Boom, you get the crash. Same thing's going to happen here. But the reason why it didn't happen here, which it should have happened right here, and she should have went down, like this, just like the other ones. and had the three of them, 1, 2, 3, because they loved it. They got so used to cheating, manipulating, using stock buybacks that now they're addicted to it. The problem is nothing makes sense. Nothing connects to the market. So they're taking advantage of that now and saying the market is what describes the health of our economy, which is a bunch of bull. What describes the health of our economy is GDP, is when company CEOs, instead of going and buying stock of their own company, so to artificially push up earnings per share, that pushes up stocks artificially, instead, to grow the economy, they need to be putting money back into spending, capital spending, equipment, and so forth. But when they don't put money into capital spending and they just put it into stock buybacks, then you got a real problem because the economy can't grow. There's no GDP. That's why our GDP is at 1% when it should be at 4%, because they're not plowing money back into the company. They're plowing into stock, buying stock back. So that's a real problem. So that's why they need QE to push the market up, because we're not getting earnings growth. So you get earnings growth when you plow money back into the company and you're spending money on goods and machinery and all that, then the economy starts to grow, people get more jobs, everything works. When you don't do that, okay, then you can't grow the economy. And so what happens is they're now pushing the stock market up without having stocks go up based on increased value. In other words, earnings. Our earnings, our company's profits are now at a five consecutive quarters negative. But the stock market's sitting all-time new highs. How can you have all-time new highs almost every day when profits are non-existent? It's all financially manipulated to the upside, engineered. So we're going to get a great crash. But before then, we still can make some money going long. And that's why we're using our chart, our MV2 here, okay, so that, and especially if you don't have much time, because when it's green, see how it's red here? It turns green. It tells you when to buy. And then it'll turn red again when it tells you to get out. That's a beautiful product right here. It's called our MV2. And that's a good way, if you don't have a lot of time, it's a good way to manage your money, because it always tells you when to get out, always tells you when to get in. It's such a beautiful product. So right now we got this movement from here up to here, and they're going to try to move it again, all fake, no earnings underneath it, no GDP, no economic growth, one big hell of a bubble. These two bubbles here are nothing compared to what this bubble is. This is unbelievable. So this is going to be exciting when this market crashes. I think the market's going to go down at least 60 or 70%. Well, we know it's going to come down from wherever they stop it at the election, going to come all the way down to where it should have been right here. So that's a huge drop in its own. Going to go right back to 2008 lows, no question about it. Every market has to correct, remember. They always correct at some point. They always correct. You can prop them up, that's what he done, but they always correct. So the best thing to do is, again, if you're not a gang member, join the gang. Take advantage of the next QE move to the upside, up this way. Take advantage of the crash, okay, and let us help you, guide you. That's what's going on with the market right now. It's all being propped up little increments at a time through stock buybacks. That's what they're doing. And they're not going to let the market drop. They're going to hold it right here until the election is over, or do QE to move even higher to solidify her win. Because the only thing that will knock Hillary out of the way right now is if we have something happening with the economy. That's the only way that Trump can win, unfortunately. Okay, but we'll see. Look at November's a long way off. A lot of things can happen. But for us to make money, we're here every day. If you're not a gang member, join the gang. And if anything, get the MV2. You'll love it. It's a color changing chart and works beautiful. Red, you sell. You can sell short when it turns red and make money when it goes down. Turn around, make money when it goes up on the screen. You think it's a gimmick? It's not. Try it. All right. See you on the charts.